Second attempt at an IPO faces fresh scrutiny. Auditors flagged mismatch in statement to lenders, statutory lapses and gaps in audit trail compliance from FY23 to FY25. Rachna Dhanrajani is here with more of those details. Rachna, tell us more about the auditors' observations.
BoAt's parent, Imagine Marketing's updated 1,500 crore rupee DRHP carries observations from its auditors that go far beyond routine disclaimers and strike at the core of accounting hygiene, governance discipline and management continuity. But let's take a quick step back. This is BoAt's second attempt to list. The first IPO plan was in 2022 but was withdrawn officially due to market volatility. But industry watchers pointed out that it was China dependency concerns shaping that decision. The second attempt was kept confidential, and that matters because the company returns to the public markets after a pause, 2 loss-making years and only a recent recovery in FY25. Now, the history here matters because it's a company that tried once, paused, retooled and has returned only after a couple of loss-making years. The auditor's note is blunt. It documents mismatches between the numbers BoAt shared with the lenders and the figures in its own books for FY23 to FY25, discrepancies that touch revenue and expense recognition and which auditors say required further reconciliation. On top of that, auditors have flagged the use of short-term funds for long-term purposes in early years. There are arrears on statutory dues, missing mandatory audit trail logs and inadequate backups of accounting records. Those are not cosmetic issues. They are foundational control problems that in past IPO-bound companies have been penalized for. BoAt's 2 overseas subsidiaries, Kaha Pte and Imagine Marketing Singapore, were singled out for material uncertainty over their ability to meet liabilities in FY23-24. Auditors have explicitly warned that while management has taken corrective steps, similar problems could re-emerge for investors. Now, that produces cross-border settlement risks and a layer of legal and cash flow opacity. The People's story adds another dimension here. Co-founders Aman Gupta and Sameer Mehta stepped down from their executive roles just 29 days before the updated DRHP was filed, moving into non-executive positions. Around the same time, overall attrition hit 34%. Those numbers will inevitably prompt questions around continuity, institutional knowledge, and whether the shift from a founder-driven operation to a listed company, the framework is fully in place.
All right, Rachna, many thanks for those details. But